You can double your revenue this year and still take home less than you did last year. I see this all the time. Business owners making $1 million in revenue, and yet they're paying their employees more than themselves and wondering where all the money went. The truth is, chasing revenue isn't going to fix this. In fact, it's probably the reason you're stuck. So if you've been working harder, but feeling more broke, this will hit home. I'm Abby Johnson. I've worked with business owners in over 40 different industries, helping them go from in the red to in the black, take home more money, take more vacations, all while enjoying the business they're in. So today I'll show you what most successful business owners are doing and how to bring home more profit instead of chasing more sales. So the thing is, more revenue usually means more problems, and a lot of people tend to throw money at their problems. I had a client named Bobby. He was a top realtor in my area. He started working with us and he was having his best year ever as a realtor. He was top in his brokerage. He was growing his team. He had employees under him. So while he felt like he was making a lot of money and maybe having to put some cash in here or there from his personal account, he didn't realize that it was actually tens of thousands of dollars throughout the year he had to put into his business to keep going. And what happens with a lot of business owners is the business starts growing like this, but then at the same rate, the expenses start growing. So you're caught in a hamster wheel you feel like you can't get out of. You need to make more sales to cover the more expenses. So most business owners are constantly thinking, once I hit X revenue, I'm finally going to be okay. I'm finally going to be able to breathe again. And let's take a restaurant. So they run a special on Groupon or whatever it is, buy one, get one half off, 50% off, whatever, and they're slammed. They can't turn over tables fast enough. They had to bring in extra people to work, but then at the end of the night, they're actually in the red. They had to pay their staff, they had to pay for the food, and they so severely discounted it to bring the people in the first place that they don't even end up profiting. You can say, yay, we had our highest ever night tonight in attendance and in meals, but if you don't have any profit to show at the end of the night, was it really worth it? Was it worth running your staff ragged? Was it worth the mental logistics of the extra food, the extra tables? No, it probably wasn't. So there is a better way to do this. The problem is most businesses are running on a broken formula. And this is the formula used in your profit and loss statement. It's part of how your taxes are calculated, but it doesn't work for actual cash flow and profitability. And that formula is revenue minus expenses equals profit. And what ends up happening is people are chasing the revenue, they go and spend the money, and then they're left with pennies at the end of the day. So what we do here at Matterhorn is we use the Profit First system. I'm a certified Profit First professional, and this is how I've been consistently helping my clients bring home more profit. What we do is we take this broken formula and we do revenue minus profit equals expenses. So we've flipped the script here. We're going to set profit aside first. This means an actual profit distribution, a bonus for you, the owner, at the end of the quarter, your owner's pay, making sure you have guaranteed consistent pay and taxes set aside. And then we figure out how to run the business with what's left over. So this doesn't mean not paying your bills, not paying your staff. This means getting more innovative with the spending you are doing. Do you actually need these things? Is there a more frugal way or economic, efficient way to get what you need? It's going to give you more clarity, and it puts some actual thought process behind your spending instead of just seeing a pile of money in your bank account and going and using it all. So with my client Bobby, I mentioned earlier, this is the first thing we did was we implemented this system, and he was able to start consistently paying himself. He could see what he could afford to hire an assistant. He could see what he could put into advertising and how much he could pay himself. Out of those closings he was get, what could he actually bring home? And then with his profit distributions, he was able to do fun, amazing things for his family. He was able to buy a golf cart to putt around the neighborhood with. I think they even started a side business with him and his son. And this system is so powerful because, yes, a lot of things probably need to be fixed in the business. And what actually happened here at Matterhorn is we were fixing businesses. We were helping them grow. We were helping put in systems. We were helping them make more revenue. But then we had a client, I will never forget it, our client Mark, and we met with him and we were like, Mark, you grew by $200,000 last year. Congratulations. We were so proud of him. We were proud of ourselves for helping him reach that. And he said, yeah, but I still don't have any more money. And my dad and I, that's who helped found this company, we were working together at the time. We were like, wait a minute, he still doesn't have any money. This is a huge red flag. And that's what brought us to Profit First. And now I implement this with every single client. And this is what helps secure the future of the business and the future profitability of the business. All right, so how do we actually put this into practice? The way we do this is you actually are going to set up 5 bank accounts that you're going to allocate to on a regular basis. That first account is an income account. This is where all deposits are directed to. If you've got deposits and expenses going in and out of one account, it can be very murky on what is new money, what is old money, what can actually be spent this week on bills or expenses. So we're going to separate out income from expenses. All deposits go into this account, and on a regular basis, you're going to allocate to these following accounts. The first one being an account called Profit. This is an account to bonus yourself with. This is to reward you as the business owner, investor, founder, whatever it may be. This account also helps you build a reserve, as you're only going to take out half of it every quarter. So that other half will build up as an emergency fund. The next account is owner's compensation. So this is what's going to secure your pay, make sure you're paying yourself consistently on time. You're not just taking money willy-nilly when you need it for your mortgage or whatever. This is your paycheck. Whether you are W-2 or not, I don't care. This is how you consistently get paid from the business. The next account is an account we all need. We all know we need to do this, but we don't. It's the beloved tax account. This is how you are going to cover your tax bill, no sweat. If you're making profit, most likely you're going to owe taxes, and that's okay. But let's just set aside for it and plan ahead so that when April 15th rolls around, you don't want to throw up when your accountant calls you. The final account is the operating expense account. This is the last account to get allocated to. We call this OPEX. This is where expenses get paid from. This account is what tells you what your business can actually afford to spend so that you aren't going and buying things before your business can actually afford them. Now, I know this may seem simple. Set up a few accounts, pay yourself first. But the thing is, most business owners don't actually do it. They know their numbers are messy, but they're afraid to look too closely. If this sounds like you, there's a link below to book a free profit assessment with my team. We'll help you set this up step by step so your money finally feels under control. I had a lawn care company client and they came to me, they were doing negative $22,000 a year, but $3 million in revenue. After a year of Profit First in place, they were positive $250,000 without actually increasing their revenue. It was simply by managing their money smarter. I'm sure you're thinking, I don't have time for some extensive financial system. But listen, once this is in place, which it's really simple to just go open up some more bank accounts, and then all you have to do is twice a month, take 5 minutes to transfer the money where it needs to go. So now with this system, you can clearly see what money is yours, what can the company actually afford to pay you, and what can the company actually afford to spend money on. Okay, you want to buy more vehicles, you want to buy more things to expand, but now you can see when is the right time to actually do that. And you might be thinking, well, isn't this going to slow down my growth? I've been able to reinvest the money. But think about how it's going to feel at night if your bank accounts look like this. There's money in the accounts. You know how much you can spend. That is nearly priceless to be able to sleep and have that stress taken off of your shoulders. It also helps you not put stress down on your employees, not frantically sell out of desperation or invent new offers and things to sell just because you're trying to hit a certain revenue target. Now you can grow from a place of power instead instead of a place of desperation. And it's totally possible to still grow and expand just a little bit smarter. I had a client, Dr. H. She already had 2 locations, and while we were working together, she was able to buy 3 investment properties through her profit distributions. Then she was able to move one of her locations into a bigger location and then had to remodel and upgrade the new location. That money was taken from the profit account. And this was all from a place of ease. Nothing was desperate, nothing was scrambling. She was able to expand the business's revenue and profits while also taking that money and reinvesting and expanding her own profits outside of the business. We just did this at a very calculated, measured pace that took the stress level off of her immensely. Now, when we're talking profitability, of course, I need to talk about pricing. And it's very easy for me to say, yeah, just go raise your prices. But again, that doesn't solve the real problem. You don't know if you're actually profitable. You don't know if that's the right range for your business, your market, etc. But what I want to tell you today is that your pricing matters so much. You have to be on point with your pricing, and I'm going to show you why. So I want you to look at this example here. So what this means here is this is their existing pricing I've highlighted. They've done 30 transactions, so 30 projects, 30 customers, 30 transactions in a month, and made $82,500, a 14% net profit, meaning they made $11,550. Now, of course, if they increase by 10%, that means that they did $90,000 in sales. It increases the margin to 21.82%, and then they would profit $19,800. Now, that's great. That's easy to go implement. But what I really want you to think about is what happens if they reduce it? Because I've heard this a lot of, well, I'll just lower my prices and then I'll close more sales and my problem is solved. So let's say this business owner did that. If they reduced their pricing, they would have, with those same 30 transactions, they would have made $74,000 in revenue. Their profit would be 4.44%, and they would have only profited $3,300. Imagine the work you have to put in and your team to generate and deliver $74,000 worth of services or goods, and to only have $3,300 at the end of the day for it. So this very well could be part of your problem. And let's say that you wanted to be low market pricing. You were fine for some reason with a 4% profit margin. To make that same profit you were previously making here, $11,550 in profit. If you reduced by 10% your price, but you wanted to still make that $11,000 profit, you would have to do 105 transactions for $259,000. That's insane. So this is why more revenue does not mean more profit. This business is doing nearly $260,000, but only netting $11,000 to show for it. So combined with the profit first system of managing the cash, you also have to make sure that your pricing is on point. And again, this doesn't mean just go raise your prices across the board. Now, I had a client who came to me. He was a large engine mechanic, and his revenue was split 60-40. So 60% was service and 40% was the parts side of it. And when I did an analysis of his pricing, I found that the 60% service was fine, but in the 40% of parts, he was actually undercharging. He thought he had his margins correct. So we went in, tweaked his parts margins, and found that he lost out on $80,000 in the last 6 months. So don't make an $80,000 mistake by not having your pricing exactly on point. So now you know it's not about how much you make, it's about how much you keep. And if you're ready to finally get your money under control, click the link in the description below and book a free profit assessment with my team. We'll look at your numbers, find where your profit is leaking. There's no cookie cutter solution for this. These are all specific strategies for you and your situation. And if you're ready to keep learning, check out this video. I show you the exact delegation system to use so that you can finally step out of the day-to-day while your profit keeps growing. I'll see you in the next video.